There's absolutely no way to control government spending, even though the new administration is going to attempt it. But interest costs on the government debt is now bigger than the military budget. Baby boomers are retiring, so it's going to cost trillions and trillions of extra dollars to take care of us, give us all our hip replacements and, heart surgeries and things like that we have been promised by previous administrations. So we've got that financial crisis coming still. We still have a bull market in equities for a while, and will bonds be well behaved, and will precious metals not be perceived as that necessary, because you don't need hedges against chaos if you're not heading into chaos. So
in today's news recap, silver dips under $30, recovers quickly. JP Morgan analysts suggest sell-off is short-term and the debasement trade rumbles on. Silver prices moved under $30 an ounce in trading Thursday morning. Still, prices recovered after the United States released its producer price index data, showing a rise in prices and suggesting slightly higher inflation in October. Precious metals have been trending downward following the U.S. election of Donald Trump to return to his previous post as president. Gold traded in the $2,570 range Thursday morning. Reduction in supply. On Wednesday, the Silver Institute Industry Association said it expects the global silver deficit to fall by 4% in 2024, with a 2% supply growth offsetting a demand boost of just 1%. The Silver Institute expects a 5% increase in supply due to a spike in Western silverware scrap. Strength of the dollar. The U.S. dollar has surged in foreign exchange markets after the election of Trump, who campaigned on a nationalistic economic strategy. The move surprised JP Morgan analysts, who released a note Wednesday stating, "The swift move lower in gold post-election ran counter to our strategists' expectations. However, they think the sell-off is a stumble, not a sea change." The note continued, there isn't a break in thesis that a Republican sweep of government will likely continue to fuel further upside for gold in 2025 as the debasement trade rumbles on. Now we'll show you more clips, but first smash the subscribe button and turn on notifications so you do not miss out our recaps. Enjoy the episode.
What's going on right now, because lots of good things are being proposed by the incoming government. The stuff that Kennedy's going to do in the health sector is mostly very exciting, and the idea of Elon Musk and Vivek Ramaswamy heading up a quasi-government group that's going to look at ways to make the government more efficient, that's also excellent. I mean, there's an awful lot of things you could do that would allow you, in a government like ours, to get rid of, say, a third of the people who work for the government at any given time. And that's awesome, because you can replace people with technology in bureaucracies in ways that the bureaucracies themselves don't recognize until somebody on the outside comes in and does it for them. So, I think that's all possible, and it's going to be fun to watch. Oh, and we could also make peace with a lot of countries that we've antagonized in the past. All of this would be excellent. But it doesn't change the fact that boomers are retiring, so we have trillions of extra dollars that have to go to my generation. We have $35 trillion and rising of debt already borrowed by the federal government, so the interest cost on that debt is spiraling out of control now. It's parabolic and continuing to go straight up, and stuff like that can't be fixed if you don't just take a meat axe to government spending. And, we're not going to do that. We're not going to cut Medicare. That's politically impossible. Social Security, politically impossible. The defense budget, I wouldn't call that politically impossible, but the guys in charge that even Trump is putting in charge right now are never going to stand for a 1/3 cut in the military budget, which we should do, but we won't, So the big items in the government budget, which are interest, Medicare, Social Security, and the military, are untouchable. I mean, they could be made more efficient, but generally speaking, spending on them has to go up. So there's no fix, and the market kind of has to impose something on us at some point. And that's already starting to happen. That the Fed started a new easing cycle here. They cut interest rates by 50 basis points, then another 25 basis points. And you would expect if the Fed can control interest rates, that long-term interest rates would start going down once the Fed starts cutting short-term interest rates. That didn't happen this time. Bond yields, especially the 10-year Treasury, which everything keys off of, bottomed just before the Fed started cutting and has been going up ever since. So in effect, monetary policy is tightening no matter what the Fed is talking about now. And until they go back to QE and they start buying long-term bonds with newly created currency. But can they really do that? Because we found out what happens when you flood the system with new currency in 2021, 22. We ended up with double-digit inflation in 2022. And people know that's possible now. It's in short-term living memory for most of the country. So if the government tries that again, in other words, tries aggressively to push down interest rates by creating a lot of new dollars and dumping them into the banking system, we're liable to see everybody front-run that this time. In other words, they see the conditions are being created for another bout of inflation, so everybody panic buys everything, which sounds suspiciously like the Austrian economics crack-up boom. So we'll see. We don't know for sure that that's the way it's going to play out, but there doesn't seem to be another scenario in which the Fed aggressively tries to get a grip on interest rates. And if they don't do that, then interest rates are going to stay high enough to bankrupt all kinds of entities out there, commercial, real estate, housing. We could spend a whole show just on what's happening with housing right now because it's already pretty much frozen in the U.S. because house prices are unaffordable for the average person. So hardly anybody can buy a house now. And you need either falling house prices or falling mortgage rates. Well, if we don't get falling mortgage rates because bond yields are going up and that's pulling mortgage rates upward, then nobody's going to buy houses. And we're seeing a lot of new inventory come onto the market right now. So if that inventory has to sell, which a lot of it will have to sell, it means house prices have to tank. So there's one recessionary indicator right there, Housing is frozen, house prices are going to tank. And you can look around at other parts of the economy and find similar stories where an awful lot of things are pointing towards a recession unless interest rates plunge from here. And the only way to make them plunge is to risk another bout of serious inflation and all the knock-on effects that implies. So we're kind of in that box, Dunnigan, where the Fed has no way out and they can only choose one crisis or another. There's no organically growing, healthy economy that can flow from where we are now. There has to be some kind of a crisis that incents us to fix the system. So, I think this administration is uniquely qualified to do that because they're already making really aggressive steps to fix a lot of other things. So it could be that we may end up turning them loose on the monetary system at some point and seeing what they come up with. But there's got to be a crisis first. So the whole dollar collapse scenario took way longer than it should have to play out, but it is playing out according to the script. It's just that each act in the play took way longer than it should have. And so we can expect the current one to take longer too, I guess.
Silver and its never-ending demand prospects, global demand to reach new heights. Industrial demand is at the center of the change in the supply and demand landscape. They believe that by the end of 2024, industrial consumption will have reached 700 million ounces this year. This would represent a 7% increase. The electrification of everything from solar panels to electric vehicles being major drivers of this demand. It is because of this that silver stands out as the metal whose uses seem to constantly grow. Silver jewelry in all markets is expected to grow, no doubt supported as well by the meteoric rise of the gold price. Golden products will still take a good share, but to fit the price targets, the public will see more silver jewelry plated with gold, providing the same luxurious look at a significant discount. Silver retail investment is not expected to grow and has had a significant drop in demand, especially in the USA, where it is believed to be about a 40% decline. The reason for investment in precious metals has not dissipated since the U.S. debt crisis remains. The election of Trump to the presidency in the USA has given some comfort to the public that the U.S. will regain control of its spending and debts. And this is why we have been seeing the recent price declines in silver and gold. On the other hand, the silver exchange traded products have had significant inflows of close to 8% year-over-year. As the market knows, these investments are typically very sticky and do not represent a threat to the market supply structure at current price levels. Mining and recycled supply of the metal is not meeting current overall demand. Metals Focus expects this deficit to remain for the next few years. Well, from my point of view, the fundamentals support healthy demand that will not be going away anytime soon. This I call the most basic market support factor. Then you must consider inflation, the global debt crisis, the currency wars, BRICS, and the unknown. Gold is the leading indicator for these factors. And though it has suffered a significant price correction since the elections from the short-term high of its prospects, this exuberance and expected relief from mismanagement of the USA's economy will be short-lived, as the problems built up over recent decades will not disappear. In my estimation, these price dips represent a real opportunity to build a safety net that will work to offset future weakness in the U.S. currency and economy. Now we'll show you more clips, but first smash the subscribe button and turn on notifications so you do not miss out our recaps. Enjoy the episode.
The mainstream media, what's left of the legacy media, at least, which isn't really much at the moment, but we're going to see those guys out there. It's going to be a steady drumbeat of stories about why the experts say we can't do this or we can't do that, and that's something see, the guys in the Trump administration who are trying to do those things are going to be immune to that stuff. But will the senators and congressmen, when they're hearing stuff, I saw this on CNN and I don't want it to happen because they said it was going to be terrible, the congressmen and the senators who are going to have to fund it and allow it to happen are going to be under a lot of pressure. So we'll see. This isn't going to be smooth. I mean, revolutions are very seldom smooth. And what the Trump administration and the people he's putting into place are talking about is a legit revolution. I think an example, actually two examples that we can learn from are Argentina, where Javier Milei just went in, he laid off 70% of the government, just fired him, and now Argentina is running a surplus, which for them is just, that's a banana republic or a former banana republic. And they've got better finances in terms of annual budgets, inflow and outflow, than any major country other than Russia right now. And then the other one is El Salvador, where that guy just went in and he rounded up all the gang members out there. The country was plagued by gangs. So he just rounded them up, put them in gigantic prisons. Which, okay, there's an authoritarian side to that probably we don't want to emulate, but that kind of resolve, getting results that quickly is fun to watch. So that kind of attitude is something that Trump's people will have to have, and then Trump will have to back them up because it's not going to be pretty. And Trump will have to deal with a lot of the blowback, in his press conferences. He'll have reporters standing up and saying, so-and-so from the FDA just lost their house because they got laid off and, that kind of thing. And their two kids they have to be pulled out of school and, they're going to have to move back to Kansas to be with their grandparents, stuff like that. And Trump is going to have to deal with it. It sounds like he thinks he's ready. We'll see, but, it could be that sometimes having somebody who's old in a place is is better than a young person because the old guy just doesn't care anymore. Trump might be thinking, I got 5 more years. Let me go out with a bang here. Let's leave the government completely transformed by the time I walk away. And then who cares what happens after that? I don't care if CNN doesn't like me. And so that's what we can hope for. We'll see, but it's going to be fascinating. And the Tulsi Gabbard thing is especially hilarious because the Biden administration put her, first of all, they don't like her because she used to be a Bernie Sanders Democrat who switched sides because she was so appalled by what the Democrats were doing. So they labeled her a Russian spy, which is ludicrous, but they trot that out all the time. And then they put her on a terrorist watch list so that whenever she flew, she was trailed in the airport by federal marshals, and then they had to put a federal marshal on the plane with her, and then other federal marshals had to trail her out of the next airport. And so now Trump made her the head of the intelligence all the agencies for the U.S. The Central Clearinghouse for CIA and FBI and everything. Tulsi Gabbard is going to be in charge of that. That is trolling right there, because they could have put her in several different places where she would have been great, but they put her in the place that is most appalling to the deep state. And got to give Trump credit. He's a world-class troll on top of a lot of other things. The guy is he's very good at needling people in a creative way. Tulsi Gabbard is the perfect example of that.
What do you think about John Rubino's bold prediction on gold and silver prices and his warning of an imminent collapse in the American banking sector? Is this a wake-up call for investors, or do you see it differently? Let us know in the comments, and don't forget to like and subscribe for more insights from leading experts like Rubino. Now watch this video right here because you'll love it. I'll see you on the other side.